Okay. All right. Hi, everybody. We are live. Um, let's discuss the market. It is a topic of a show. I'm setting up everything. Okay. So, all right, let's go through the indicators and let's try to see what they tell us. Okay. Maybe the place where we want to start is like always, we want to compare where we are, then we can go a little bit deeper in the other indicators. Let's start with the cycle comparison. So this is one of our trading view indicators that we develop, where we are trying to take a general look at the market, right? You're familiar with these. I have displayed it in different shows. It's basically this idea where if everything repeats like has been repeating for 16 years at this point, we should see this pattern of 2 years along with power law, which basically is what we experienced in the last 2 years. Then previously, 2 years ago, basically we had a bottom, right? What is indicated here. 1 year before the bottom, we had an entire year of bear market. This is usually when the price corrects itself and it goes down from the peak, and it takes about 1 year. And then before that, we have a bullish case, that is basically an exponential behavior for about 1 year. Now, these cycles have been repeated at least 3 times in a very, very precise manner. And it's so precise that the entire point is we don't want to ignore that, right? Because we're trying to learn from Bitcoin, from these patterns. And so the default approach is something Bitcoin has done over and over again. Is probably there is something fundamental about it, and probably is going to happen again. Now, this is never 100% the case, right? With the power law, it's another thing. We think that the power law, it's really a true backbone of the Bitcoin behavior, and so far, has not been violated, and there are very strong reasons to think that it will continue. The cycles, it comes, there is kind of almost like a hierarchy of behaviors and things that we can count on in terms of Bitcoin's behavior. And, the cycles seem to be a very important and very consistent features, right? One of the beautiful things about this graph is to show how incredibly consistent for being something that is, an asset that many people think they don't necessarily follow precise patterns, has been very, very consistent in terms of where the bull starts, where it ends, where the bear market ends, and so on. And so that is our point of reference. We are trying to see how the current cycles compares to the other ones, right? Until we have some very strong evidence that there is not a cycle anymore, or maybe Bitcoin is doing something else. So we are operating under this assumption. And so it's a good way to see where we are right now in comparison with other cycles. So this chart allows us to do that. So, for example, we can look at what happened last cycle. So by this time of a year, so initially, this cycle seemed kind of very similar, right? It was, I say many times, it was more bullish. The previous cycle was more bullish, but somehow we were behaving up to a certain point, up to kind of the middle of December. It was pretty much similar. In fact, when we go to this other way of looking at the data where we basically take out the general path, right? We subtract the trend, the power law trend. When we subtract the power law trend, but also we do this normalization where basically we divide by the volatility. What that allows us to do is to compare apples to apples, because you can see from the graph and everybody is aware of it, that the first peaks, the first bubbles were really huge, were maybe like 15 times deviations from the trend. When it went down to about 10 and then 5 and so on. But if we divide by the volatility, so volatility is basically how much the price or the returns change. The returns is the price today over the price yesterday. So if you look at the variability of this quantity, has been decreasing over time. And it's almost a way of accounting for the fact that Bitcoin is becoming more stable. If you divide by that quantity and you do it over a window, you can choose, for example, a 6 months window, then the cycles, peaks, are very comparable to each other. Not exactly the same height, but very similar height. It is very interesting because it's one way of accounting for this decrease of the peaks. It's really all in the volatility. And you can see they do different things, but the blue line is the average. You can see there is a pattern, right? We go up during this time, that is highlighted here in blue, this region. When we go down during this time, that is the real bear market. Then for about 2 years, we stay flat. That is, in this picture, being flat means basically we are not flat, we are following the power law. But it's still, in 2 years, is a huge, right now, these returns are diminishing. In the past, we're bigger. Right now, we're talking about 40% a year gain. So, in 2 years, you're supposed to go 80% up, right? Almost a factor of 2 up. So by the power law alone, we are still growing a lot. But if you subtract the trend, it will look like flat. And you can see it's flat here in this region. So it's a really consistent, coherent picture that I don't know many people explaining it in this way. If this picture, first of all, is not something made up, it's real. The data tell us about it. And I think it's the most consistent way of thinking about Bitcoin as a coherent phenomena that has very precise patterns. Now, the question is, are these patterns going to repeat this time, right? We are still operating under the assumption that yes, because that is the really only logical thing to do. Notwithstanding what people say, this time is different or whatever. It could be different, but unless we have strong evidence that, okay, we are on different behavior, there is no, at least this cycle is not happening or is not happening like before, that is our operating assumption. So how things look like, right? In general, they looks less bullish. They looks much less bullish because all the different cycle, with the exception, I need to update this graph and add actually the first cycle, because we have a cycle number 3, cycle number 2, and I should go back 12 years. Here it goes back 4 years. This is what the previous cycle looked like. This is 8 years, but we have a first cycle that was 12 years, and so it should show up here. You can still see how it looks like by going here, because okay, this was we usually consider the beginning of a cycle. It's just a convention. We use the peak as the beginning of a cycle, right? Because of that is time 12. We use this terminology of a time. 12 is at the top, 3 is the bottom, and 9 is when the bull market starts. So I will add this pattern here that is what happened 12 years ago. But you can still take a look at what happened if you go here, because we have the information. It's not shown sequentially like here. This is what happened 12 years ago. 12 years ago, actually, maybe this, is one of the less, let's say, more comforting news, because really the bull market didn't take we were still going up, right, like always, through the power law, but the real crazy bull market didn't start until the mid of January, January 14th. And so we have few days. If after the 14 we don't see something, like a very fast pattern, up, then it will be problematic. It will be like, okay, something is different, right? But I would say in a bearish way, not in a positive way. Many people, when they say this year will be different, they imply some kind of crazy behavior that we never had before, but if anything is muted in comparison. And this is, again, this graph allows us to compare, actually basically almost superimpose the behavior, and you can see how these current cycles compared, where we kind of left the power law behavior in a similar time, in a similar fashion. It was almost scary for some time how closely the two cycle look like. And then, by the middle of December, what happened 4 years ago was that the price ripped. They went, there was a clear sign we were in a bullish territory. And right now, what is happening the last few days. We had the first correction, we left the 100,000 territory. We went back to it. Now we're back again below 100,000. So we seem to kind of stalling a little bit, it's not, it's nothing to worry about yet, because first of all, in terms of power law behavior, if anything, we are doing too much power law stuff, right? We are moving actually along with power law, right? It seems that we leave it, when we go back, we don't quite touch it, but we stay slightly above, and then we go again up, and then we go back to it. So actually, it seems that we are moving along with power law. In fact, beside this correction, when we went up, we touched the power law in March, and then we corrected ourselves. Then we went back to it, and now we are hovering. So almost all the growth from middle of March to today, it's all along with power law. You can see, okay, it just did that. If anything, basically we were like 70,000, and now we are whatever 95, 97. It's all due to the power law. It's all power law growth. But it's still amazing, right? I mean, it doesn't seem much, but it's quite a bit. It's even when we move just along with power law, it's still pretty bullish behavior. But in general, during a real bull, we should outperform the power law by a factor of few. Like this particular time, like I told you in the beginning, like the first bubble, we went up almost 15 times. We were 15 times faster than the power law, and the power law was already fast at that time. Right now, we are expecting, if we go to the 200,000 that I calculated, because everything I discuss here is based on some kind of calculation. This calculation, as explained many times, is based on the decay of the peaks. If we want to go to 200,000, we kind of need to outperform the power law by quite a bit, because the power law right now, you can think in terms of returns, right? They say returns is the ratio between the price today and the price yesterday. That returns for the power law are about 0.1% a day. This is what we have right now. If you compound it over 1 year, it's about 42%. But to reach this, we will need to double it, because usually, 40% will not bring us, right? It will bring us more to close to 140,000 or something like that, right? and instead we are thinking that we could go to 200. So that means we need to double the speed at which we go up and not following the power law. We need to do better than the power law. And at this particular point, we are not doing that. So, this is what is going on at this particular moment. Now, it's not yet anything to be worried about. I was talking today, somebody was interviewing us. I made an analogy. Hopefully, it's not too offensive, but they said, it's like having a child, and the child doesn't talk the first year, it doesn't talk the second year. When usually children start to say something. Einstein, I think, didn't start to talk after 2 or 3 years or something like that. The parents thought that he had some development problem. But, some people takes longer. It doesn't mean that are going to be not clever. Sometimes actually maybe because we have a lot to develop, it can take longer. But at a certain point, there is a point where you get worried, right? You get like maybe 3 years, 4 years, the child doesn't talk. Let's go to a pediatrician and see if there is a problem with the child. What is going on. So it's kind of like that, where okay, there was this slowing down in December, kind of almost stalling. The engine was stalling, and they thought, well, maybe there is something related to tax season. People are waiting. We had a pretty intense year. People are waiting for the end of the year. When things will start at the beginning of the year, and nothing happened. Right? There was a few days where actually we went back again to 100, and then we actually corrected again. So I'm not sure how to interpret this. And maybe there is something that is going to happen after the election, because I don't want to attribute to a particular person, Trump or anybody, what happens to Bitcoin, because Bitcoin is beyond all these things. But sometimes you need a catalyst, for things to happen. Maybe everything is ready, but then we need a catalyst, something that pushes, like an avalanche, right? Sometimes just clapping your hands if you are close to an avalanche, that's additional sound, the shock wave from the clapping pushes enough the snow to create an avalanche, right? But the avalanche was already ready. It was just waiting for kind of a last straw that broke the camel's back. We need something like that, right? Maybe, and the market will respond, and we will have a proper bull run. Or maybe we don't have the conditions, right? Because it's something that I have actually, and we can discuss in a moment. Maybe the conditions are not there, because if anything, if you check many of the other parameters that we usually check, and where I'm going, it's the liquidity thing. The liquidity is still missing. So maybe that is the missing piece that we need to continue in the bull run. I don't think it's a problem in terms of following the power law, because the fundamentals are still there, even without global liquidity. But the fact that there are signs that the global liquidity is not playing along, it's problematic, right? And maybe that is what is stalling the engine. So this is the first observation about comparing the different cycles. Again, to summarize, it started where the two, this cycle and the previous cycles looked alike. Actually, we were anticipating relatively to, here it says actually first cycle. This is the second cycle, not the first. This should be changed. Okay. And for some reason, I don't have a first cycle here. But again, you can find it here, right? This is where the first cycle, how the first cycle looked like. It needed until the middle of January to start, and then it went up pretty fast. And so we don't see that yet. We started to see the beginning of a bull run, and then it kind of stalled. And so it's a little problematic in terms of comparing things. And it's not going like many of the bullish people kind of claimed that the price was going to explode, that we are, because to imagine more time passes by, more unrealistic some of these scenarios that people came up with. They mentioned 500,000, a million. It's going to be more and more difficult as time pass by. We just started, right? It's just the beginning of the year. Remember, we have a year, right? Because these predictions were not about 10 years from now. It's what happens in 25, right? I'm already worried that 200,000 is going to be a challenge. Imagine people claiming 500,000. It's ridiculous. But anyway, so what else can we check? Let's check the general indicators, right? So here, instead of comparing, I have a few different ones. So again, by this time, usually we see a much more bullish behavior, but we are above a power law. That is a good sign. And we have been consistently above. Usually this is associated with bull run, because we can go above a power law a little bit, like it happened in March, when it's not the right time, there is some kind of a correction. And that happened a few times before, actually really one time before, because all the other time we have been below. It happened here, right? But we went briefly up, and then there was a strong correction, because the price was not supposed to be there during this time, during the bull market. And never happened before. All the other cycles, we are always been within the middle power law and the support line. In fact, very close, almost hugging the support line. Same thing here. Okay. So yeah, it's a good sign in a way to be above the power law. In the other, we should start to see leaving the power law and going much higher than just hugging the power law like the price is doing right now. This one is the clock. The clock was actually pretty precise to tell us that at the moment of the transition, we were about 93,000. In fact, I made a prediction. I say, by the end of the year, that this is when this market is created, we were going to be close to 93,000. I almost got it to a few $100s. And it's doing what it's usually doing, is telling us that by the time here, right, usually when we have this transition to full bull, this is what the clock indicator does. It labels the different times, the bottom, the top, etc. And Bitcoin has been very much like a clock, right? So you see, we were already here by the transition to full bull market. We were here. So we were going up pretty fast by this time of here, kind of equivalent time. It is the end of quarter of that second year. The actually, it's the beginning of a quarter of a second year after the peak, and in quarter one of the year that is associated with the bull market. Now, this cycle was a little bit unique, because we had two peaks. We had one peak where it's supposed to be, and then one early peak in April. I'm not sure we are going to have the same scenario now. It looked like in the beginning, but now it's much more quieter. So, it's kind of comforting that there is one entire year to actually reach the top. I don't know if we have a early top in April. It's not clear yet. And again, if we compare where we were in previous cycles, right here, we started to go up. So that is one thing we can do to compare this time, equivalent time in the clock, right here. So it's nothing to be alarmed yet, right? But things should be going exciting soon. If it doesn't happen by the end of the month, for example, by the time we do a couple of more of these market recaps, market statuses, we will have to check what is going on. It's still possible there is a bull market. Maybe it's just late. There is always, we're still talking about statistical things, so there is maybe some variability in these when things get really exciting. But what happens if it becomes February and then March? So it's kind of curious. We are adapting and reporting the situation as it happens. It's interesting. I will be more excited if it was more going faster than other cycles. It will have been difficult to reproduce the early cycles. Will have been shocked if we went even faster than some of the early cycles. But people were saying, oh, it's going to look like 2017 or 2013. And it doesn't look at all like that. It's actually much, much more muted than I thought. Anyway, so this other indicator shows the deviations. These are normalized deviations. And this doesn't look too different from how it looked before. One of the things could contribute to this behavior is that we kind of got very excited about the ETFs. So the price was already quite high, right? Relatively to where it was supposed to be. Then yes, we had actually a correction down to the 50s, but even that was relatively high. So it's possible that all this is taken in consideration. We added a little bit more than that, so we went up. But the market is not ready for a consistent bull market yet, because even if you compare it with when we had this deviation, relatively to the power law, was actually this one was higher, right? So I don't know, it kind of similar to that, but also there was a stronger correction that helped a lot. It was a much stronger correction than this correction. COVID kind of reset everything. We actually brought it back. This was COVID, brought it back to the floor of the power law. But this indicator is supposed to go from 0 to 100, where 100 is the peak. And this is where, so it's supposed to climb, and reach a maximum here, because this is when the end of the year of next year is supposed to happen. So everything, the purpose of aligning these indicators is to actually compare them, right, one to one, and show how everything aligns. Now, we also use this indicator, that is what we call a Hurst indicator. The value of this indicator is to identify different regimes. So basically, it shows us if we are in a mean return type of pattern, when basically the price oscillates around some kind of an average, and when we are on a trend following pattern. And so basically the idea, if it is below this orange line, that is this indicator goes from 0 to 1. So if we are below 0.5, it tells us that we are in a mean return regime. If we are above, we are in a trend following. And what happened, during that time when, you remember the 55K gang, right? We were going back and forth. It did go down and told us exactly that. We were in that situation where the price was basically oscillating around some kind of a mean. And then once we started to have a bull run, this indicator corrected. It's a delayed indicator, so it's more about confirming patterns. But usually, notice what happened during a bull run, right? It starts to go yellow, then red, it climbs until it reaches a top during the top of a bull run, and then it corrects itself. And this is going, at least is going in the right direction, right? usually it's pretty straight. Here is bending, so I'm a little worried about it. But usually, it's associated with okay, we are climbing. Basically, we are following the same trend for almost 1 year, and so this is at least in the right place. It crossed across the 0.5 division, and is climbing, and it continues to climb. So we will have to monitor. But in general, it tell us that we are trend following instead of going back and forth. It's not detecting that. And now we can talk about what I think it's maybe the culprit, right, of this situation. And this is this topic of liquidity. So I've mentioned many times this indicator that I created. So basically, this indicator is based on the relationship between the price of Bitcoin and many different microeconomy markers that are things like M2, the Federal Reserve, other type of measure of how much money there is in circulation, right? So if a government will print a lot of money, this indicator should detect that. The different quantity that I consider are here. These are all different. So I have a Fed, I have TGA, Treasury General Account, different M2, different banks, etc. And the bottom line is that this is not a perfect indicator because it's a complicated relationship, the relationship between price and liquidity. There is a relationship, but it's complicated. It's not easy to represent. It's not like a simple power law between the two. But the purple line is supposed to represent at least roughly how the two relate, right? And one of the things you do when you create models like this, you try to look for some kind of useful pattern that you can use to make some kind of statements, right, about what is going on in terms of the relationship between the two. And one of the things I mentioned many times is that every single time we had a bull market, like here, here, we always had the purple line being above the white line. And so, that is also shown with this shading that is green, right? So it's kind of a green light for the bull market to start because we have plenty of liquidity. There is room for Bitcoin to grow. Usually the money, some of the money that is around gets transferred into Bitcoin. People buy Bitcoin, they push the price up. Then, in fact, you can use almost like the divergence between these two, where now the white curve is above the purple line during the peak of a bull. So basically, when this running up is almost unsustainable anymore. Usually, we have it can go up to few more weeks, but it's basically running out of steam, right? And that is shown by this red area where now the liquidity doesn't follow. All the foam of it is created by this price going up in an irrational way. Same thing here, right? But I was expecting something similar. We added this, we deviated from the power law because of the ETFs, right? This is when the ETF were approved, was a lot of excitement in the market, and then we still had a correction, right? Because we were not supposed to be there. And so I kind of was feeling comfortable about this interpretation of this information because I thought, okay, we're going to have a correction. Maybe the correction continues, right? This is why I drew these lines. It's going to continue down. That will have meant, maybe by the end of the year, we were going down to, we didn't have to go much, right? Because, okay, here was 60,000, right? We had some lower peak to that, but let's say this middle ground went down all the way to mid 50s, right? It will have been good enough because, I mean, meanwhile, if liquidity went up also, the two will have switched, right? So the purple will have been above. Now, maybe it took time for the price to recover, or maybe even went down lower. So I was imagining a scenario like that, to kind of make it similar to what happened in the past. I wanted to see the purple line to be above a white line, at least for some time, before the bull market started. And then kind of the two moving in parallel with the purple line being above until maybe we were close to bubble territory, or at least, let's say the peak of a bubble. So I was expecting similar behavior. So if you want to find, beside the other things I just mentioned that are still, there is still a chance that the price corrects and it goes up, and then it kind of will look like the other bubbles, maybe, with this delay, when things start to get really exciting. But if there is like a substantial difference between the two from a data point of view, is this, and the reason I put that, I wish I could make the question mark bigger. For some reason, 40 is the biggest font that I can use. What is going on there, right? What is happening? I don't know. But so as a scientist, sometimes I have to say, I don't know. Let's figure it out. Let's try to understand it. And many times you cannot understand it until you have new data. And so I've that is the situation, right? Right now, we don't have a liquidity that we usually have during this time of year. And until recently, until the beginning of a new year, I was thinking, maybe again, it's a new year kind of thing. There is tax season, maybe people are looking for, whatever entity is printing the money or moving the money around or whatever is waiting for the new fiscal year, right? And again, it's only 10 days, only 1 week. And so maybe it's still going to happen. But that is what is worrying me, right? And really, there are three scenarios. Let's discuss them. The first scenario is, for whatever reason, we are missing the liquidity, and without liquidity, we don't have a bull run. Now, I don't think it will impact too much the growth along the power law, not having a lot of liquidity. I think we still grow along the power law. We will have to see. But, the bull run are an integral part of what people expect in Bitcoin behavior. So the question is, how the market will react if we don't have a bull run? What is going to happen? Will people still be okay with consistent growth without having these excitement periods? Because the excitement periods, like it or don't like it, bring new people, bring news, bring attention. Then there is also, the other component that is going down, and you kind of get the opposite, right? Everybody now gets really sad or even scared when things crash, etc. And maybe you lose people, but it's part of being a Bitcoiner going through these cycles, right? So if they don't happen, how the market will react to that, right? Do we have a correction? What is going on? Or maybe it's the new behavior, right, that is going to be accepted. We just simply move along with power law. I don't know. I don't know how to describe this. So that is one scenario. The second scenario is, we do have a bull run. It's going to be a muted bull run. Maybe we don't go to 200. Maybe we go to 150. By the power law itself, in 1 year, we are going to 135, something like that. So, saying that we go to 150 is almost like saying that is still following the power law. There's going to be some kind of, maybe just a little bit above that, right? 180 or something. We still have some kind of bullish behavior, but not too far away from the power law. That is, and is going to be driven mostly by sailors, by the ETFs, and so on. There is not enough there to push it to where some people would like to go, right? That is another scenario. Another scenario, third scenario, is going to be where, maybe the market reacts negatively to this, so it's not accepting that we don't have cycles. It's going to be something weird, and all the excitement that we built over, kind of like last 2 years, right? Even in particular, the last year where we thought there were all these exciting things, the ETFs and Sailor buying even more aggressively, and then Trump and everything, right? Um, and then it doesn't happen. No, we are still growing, but at this pace, right? It is 40% a year. If you're thinking about it, it's still amazing, but like, again, given there is a lot of expectation for much more bullish behavior during this period of time, the market, maybe, some people take it as a negative sign. They're not excited enough. That is part of the problem, right? That people are almost addicted to this kind of excitement, with Bitcoin. And then, they still deal with the withdrawal signs during that year when we go down. But it's another form of excitement. I don't know. Maybe, maybe some people need that kind of adrenaline, and then the market reacts and there is some kind of negative correction, right? And we go down. And I don't know by much, can we continue along this path without, getting rid of some of that euphoria that a lot of people still have, right? It's now, I don't hear many of the moon boys talking aggressively like they did before, but we had a few days where we went above 100 and we came back again, right? There is that sentiment is still there, it's not gone. So I don't know. So we have one of these three scenarios, but let's add a fourth one, and the fourth one is, well, maybe liquidity comes back, right? Maybe it's just delayed and it's coming back, and there'll be a injection of liquidity. Maybe it doesn't happen until the end of January, or the beginning of February, or whatever. So it's going to come back. Things are going to happen like before, and it's just like a delay of the liquidity, and then the liquidity will push up the price, and this is when we have a proper bull market, maybe delayed by a month or two, and so statistically it's not going to be a big deal. It's going to look slightly different from the other bull market, but it's still kind of the same scenario. So these are the possible scenarios. But when people were kind of criticizing me to mention liquidity all the time, there were many people who would say, oh, that means your liquidity model is broken. I mean, this is not directly related to the power law. It's additional information. It is not one-to-one with the power law, but they were criticizing, well, the model is supposed to just show what is the relationship. If the liquidity is not there, it's going to show the liquidity is not there. It's just a kind of a tool to tell us how the two relate to each other. And it's kind of interesting that without the liquidity, we are still surviving. We are not going down with the liquidity, at least. So we're staying there, but there is no bull market, So is this causative? Is this just a coincidence, that we don't see a full bull market yet because of the liquidity going down? I don't know, but it is one of the pieces of information. See, this is where, as a scientist, you have to say, I don't know, because if there's certain things we can show that they are strongly correlated, and there is but in terms of a precise pattern between the two, like, with the power law, for example. In this case, it's just an observation where one is going down and the other one is starting to go up, right? When here we were actually doing two different things. And at that time, when I didn't see this stalling, I thought maybe we don't need a liquidity. Maybe we are in a different regime where the ETFs and sailors are enough to push the price up. Maybe I was worried about liquidity and now it's irrelevant. But now that we are stalling, I'm sure it is irrelevant. That is what I'm trying to say. So at the same time, it's not dragging down the price, right? So there is no a one-to-one correlation. It's just that something seems missing. That is what I have to say about that. Now we have this other indicator, and then I can take questions. That is a recent one. So this is based on some of the discussions I had with Plan C about. Sorry, this is I'm going to update it. Sometimes you need to update it, otherwise it's showing the wrong price. Okay. Yeah. So the idea of this indicator is that probably we don't want to think about Bitcoin in a non-temporal fashion, right? So Plan C has this quantile model. We also discussed it in our physics of Bitcoin yesterday. We went through some of the details of it, but Plan. It's not that I'm trying to criticize him, because most of the time we are in agreement on the power law, etc. But he's enamored with this model that is called the quantile model. It has good idea. The quantile model has some good aspects. It's actually pretty cool algorithm. It's try basically to give different weights to where it's basically ranking all the deviations from the trend, right? And then it gives different weight to these deviations according to where they are, right? Are they, are they below a certain quantile or above a certain quantile? So you above a certain quantile, you decrease the weight. Below the quantile, you give it a bigger weight, right? So it's kind of a way of giving less importance to outliers. And in a sense, you can think about the bubbles like if it were outliers. The problem with that, it's what I don't agree with him is the interpretation, right? The interpretation will be now if you do that, then you have like a true power law, and that true power law, then it's kind of you can ignore the relevance or importance of the bubbles, right? And I think it's a wrong interpretation, because until we have evidence that we don't have cycles anymore, and if we don't have cycles anymore, then you actually, in general, we still can rely on the power law, because the power law, the beauty of the power law is that the component above the power law and below the power law, they kind of cancel each other. So the total result is still the general power law. But in terms of understanding the statistics, you will not want to use the statistic of these last 16 years. If we follow, imagine we continue, right? That is a possible scenario. We continue here following this blue line. You will want to use only these statistics, because that will be the relevant statistics. You will not have any more this scenario where we go up and down like this. It will not be the relevant thing to do. And so he wants to use these statistics where we actually add this oscillatory behavior and applying to this new situation where, because of that is part of what he tries to say, is one of the people who say we don't have cycles anymore, right? We are done with cycles. But in that case, you will not want to use the current statistics, because if you use the current statistic, you're dealing with something like this, where you have really two different regimes. You have a regime where we are above the power law, and one regime where we below the power law. And so if you stick with these, and if we do continue to have cycles, then you cannot have a time agnostic, because this is what he was saying. It's this quantile approach is a time agnostic approach. It's not, because if you take it seriously, it's this model that gives you different probability values, right? As you deviate, let's say from the bottom, you have different value, right? 10% quantile, 20% quantile. The interpretation will not be when we are here at the bottom and you go up there, and there is because basically the quantile gives you different lines, right, that represent different probability. You say, well, the 90 quantile is 200,000 or whatever it is, right? Maybe, okay, because it will be closer to this, maybe 80,000, right? So we are a 16, and you're saying there is a certain chance that we go all the way to 80,000. No, not really. It's actually zero, because when we are at the bottom, in particular, if you take it like literally, right? Are you jumping all of a sudden to 80,000? It will be absurd. It will be an absurd interpretation. And that actually one of the criticisms of the people that do not understand the power law give all the time. According to them, we have all this range, right? The power law says we could be anywhere from here to there. It doesn't say that. It doesn't say that at all. It says there is a line that represents kind of a compromise between the peaks and the bottoms, and in a way, the bubbles cancel each other, and we go back to the power law. We leave the power law, and then we go back to it. But if you want to properly describe the behavior, you have to say that there are two regimes. You cannot do without that. If you do it, then basically you are kind of agreeing with these people that say could be all over the place. And it's a crazy interpretation. If we are at the bottom, there is almost zero chance that we go there to the other range, during a bottom. It's not like 10%, 5%, 1%. It's maybe one in a million, And if you actually take it really literally, where today we are 16 and tomorrow we are 80, it's even less meaningful, right? That is not the right interpretation. It's very important when you do this model that you interpret them correctly, right, in a meaningful way. So the best interpretation, if you want to go beyond the blue line, what the blue line represents is some kind of a compromise, mathematical compromise, right? That's why we call it the fair value. And the way to use it is as a reference, right? To say where we are in the cycle relative to it. Are we below it or are we above it, right? And also we have a support line that is another point of reference that tell us what is the historical lowest value. We never went below this white line here. It's kind of and we think has to do with the cost of production of Bitcoin. There is a real physical meaning behind this line. And so, the correct interpretation is we really have two regimes. There is a regime where we are above the power law and we are in a bullish behavior. And actually, the peaks of these bubbles can be explained only, like I just said before, only by the volatility. So it's almost like saying, really, there are two power laws. There is a power law that is this dark line here, that is a little bit more bullish, not in terms of a change, because you see how it's parallel to the blue line, but in terms of where the mean is, right? Where the mean value is for the price. So it goes above. So the mean value, it's a little bit higher. It's just a constant that you're adding to the data. And then if you want to measure the deviations, you don't want to measure them from the bottom. You don't want to measure from the middle. You want to measure them from here. And now the peaks are nothing else than the possible volatility range if you measure it only using the data point above the power law. And then everything makes sense. It's just within two standard deviation of this middle behavior. And so this is how you can explain completely coherently and actually consistently, because you see how it works for all the different bubbles. These basically I'm trying to represent the deviations from the trend. And the trend here is this dark line in terms of this different shading of this red, right? The darkest shading corresponds to the largest deviations that are about two standard deviation. Not two standard deviation from the middle, but actually two standard deviation from this. It is actually a shorter range. So even here with these extreme variations, we are saying we don't go more than two standard deviation. And and because it's done in terms of this model is based on terms of deviation from the trend that are already normalized to volatility, like I show you from the beginning. And if you do it in that way, then you can account for the diminishing returns of the peaks. So it's very, very consistent model. And you can see here what happens when we are below it. Here, this was a deviation where for temporarily we left the power law, and then we had a correction. But we will not call it bullish because it didn't last enough. There was a correction. Sometimes it can happen, but here I'm just dividing the data into groups: the data below the power law and above the power law. And when we are below, this is a proper average, and most of the data cluster there. I have some slides that I posted online where I actually took this deviation from the trend, normalized by volatility, and then you see it's almost shocking. They all cluster in a very narrow range, and this is what this indicator is trying to show. That actually, when we are below the middle power law, we tend to be mostly in this green area. Most of the data is there. And any deviation from that, it will be something that it will correct itself, right? So, for example, that is one interpretation of the bottom, that is a negative correction from this trend. And so it will correct going up. And then where it wants to go, in the middle here. It doesn't want to deviate from that. And if it does deviate, like it did here, then you will have a correction going back to the green area. And this is how you interpret. And the other things you learn from this graph is that we have fast transitions. When we go from one to the other, it happens usually very, very fast. Maybe we need to characterize, but you don't have a lot of data points, so it's difficult to do stats of these transition areas, besides saying they usually happen very, very quickly, almost vertically, right? And then we go to the new state. It's almost like there are two states for the system. And right now, if you interpret everything using this new indicator, I call it the bimodal power law. We are above. We are in this region, and it's not supposed to be like this, where we tested it for a little while and then we corrected. It's supposed to be consistently, right? But again, like I say, I'm expecting to see large deviation. The volatility is not there yet. There is not much volatility. There's usually huge volatility associated. And it's, volatility, it's doesn't have a sign, but usually it's volatility plus an average, right? Average returns that are, better than the power law. We should not be just following the power law. So this is all what I have to say so far. We want maybe one more graph that we can look at to complete the picture. It is this one. And this is the volatility. This is both the volatility and the returns. So, okay. So the returns here is basically usually in this graph, I turn on. So here I turned it off. Okay. Yep. Let me see. 1.5. Okay. So the red and green curve are the volatility. Basically the volatility. So let's start with the returns. So the returns, as explained many times, is basically a measure of how the price changes, right? It's the ratio between price today over price yesterday. And so, for example, 1 will mean the price didn't go anywhere, right? 1.1 will be 10%. 1.01 will be 1%. And right now, if we were following the power law, see the blue line is the power law. See how over time the returns of the power law go down, right? They go down here. The blue line is the theoretical result expected by the power law. Now these are But individual returns, of course, are all over the place. Some are higher, much higher. Like, there are days where we make 4%, 5%, right? So these gray lines is the individual returns. Sometimes they are, you know, it's not positive or negative. It's below 1 or above 1, right? Above 1 means you have a gain. Below 1 means you have a loss. So they can be above 1 or below 1 by quite a bit. But you see, in general, if you look at something like this, you will not know if you're above, the average is above 1 or below 1. It seems pretty symmetric, right? One of the things you can notice during the bubble, there is much more activity, right? And so this activity, basically the standard deviation, how much variability you have, it's what are called the volatility. And you can see the volatility tends to peak during the bubbles, right? It's much higher during the bubbles. See, here you have a bump, and so the volatility right now is pretty low, right? So one of the signs that we are in bubble territory is that the volatility grows and it's much more active. We don't have that much volatility, so that is weird. During the bottoms are associated with low volatility. That is this red and green curve, right? This is volatility above and below, right? Because it's a standard deviation above and below the mean. You are adding into the average and subtracting to the average. It's basically give you a range. But anyway, that is one of the things to notice. I usually turn off these gray lines because it's useful information if you want to focus on that, but it's a little distracting, so I'm turning it off. And what you're left with is this white one, right? White line. The white line are the average of these returns. And you can take the algorithm allows, or the indicator allows you to take different amounts, right? You can average it over 10 days, a month. Right now, I'm averaging it over one entire year. The usefulness of that is, actually is a pretty good indicator to tell us when the bottoms have been here, here, and where the tops have been. And look at how interesting it is that the bottoms are all kind of along the same flat line. And that has to do with the fact that we have this support line, that there is a support line. We have been consistent over the years. It's pretty dramatic. Look at this, right? All the bottoms are aligned, along this line, while the peaks are consistently going down over time. Okay, so that is one of the things that everybody's familiar, but it's very, very clear way of showing this. Now, imagine, right, by when you have a peak, you basically, what this represents are the daily returns, average over 1 year. So when you have a peak, you look backwards and you say, well, I am here. It was a fantastic year because, you are in this bull run. And if you want to calculate what is your daily return, right? So if you average from where you were 1 year before all the way to today, that is, the day when you peak, and you calculate what is the average return, you go there and you can check, like, for example, last cycle, we were basically, for an entire year, we were making something on the order of 0.75% a day in average for an entire year. That is a lot of change, in one single year. If you look at the previous one was almost 1% for an entire year. The previous bubble was almost 1.5%. That is crazy returns. We are expecting much smaller returns this year, but it needs to start to go up, because this is kind of where we were last cycle at this point, right? See, it's actually there, and then we started to climb, and it looks kind of flat. These returns look flat for quite a bit, and yes, we are above a power law in terms of daily averages. This is a theoretical value for the power law, but we are not increasing. That is what I'm expecting. If we are beating the power law, we are not. So I don't know. Again, nothing to worry about, but we want to see this kind of behavior to confirm that we are actually in a bubble. Now, it took a little. This is again because last time it's actually better to say that the previous bubble, right? We had an early peak. We have an early peak in April, so there is still room, right? It continued to be flat for a little while. Actually, to be honest, that is probably a more honest comparison with this cycle, where it took a little bit longer before we actually started to see an increase of the daily returns. If you compare it with not the previous cycle, but cycle number 2. And same, actually, with cycle 1, we actually had a correction, and then there was the real bull market started. So, it's, again, it's different, because initially it looked like exactly like this cycle, the previous cycle, so cycle number 3. Then we did something different, right? With cycle number 3, continued to be bullish in December, then early January, and it peaked in April. So we are not seeing that. We had the beginning of that in November, so it kind of almost looked like it was a similar cycle, but now we are taking our time. But it could be okay, because the cycle don't have to be identical, right? It could have some similarity with the cycle number 3, for example, starting early, but then it stalls, and then it starts again. Right now, it's too early to say that there is not a bubble, this cycle, but there are no super bullish signs. I mean, it's obvious, right? Everybody knows that just by looking at the price. We went above. We were almost reached 110, and at the point, right, we were at 1.8 or whatever, and then we corrected, and then kind of stayed around this price for quite a bit. But yeah, these are all the things I'm looking, and so right now, just to conclude, I will say we need to continue to monitor, right, and see which one of these scenarios is going to happen. Liquidity continues to be a concern, and I would like to see liquidity changing. All right, so I'm going to stop here. I think you have an idea of what what I think about the market right now. So I will try to answer your questions. Okay. So I'm going to highlight your comments. Sasson Smith says this. Good morning, Joe. I'm highlighting because he's here every single time. He doesn't miss one of my episodes ever. So shout out to him. Thank you, Sasson Smith, to be here. Okay. All right. Let's go to the next one. Yeah, so we discuss global liquidity, right? This is a comment from Pakistani Odol. For global liquidity chart, this is Paolo. But what does it say different from what I said? Does it tell you the liquidity is going crazy and is going up? Because if that is the case, it's not the case. So I don't know if Roll Paul, maybe he's focused on liquidity. I don't know what he has to say about that. Actually, I saw some interviews recently with him, and it was not clear about because he's one end is trying to be bullish, in the other um, we don't have bullish signal from liquidity, then all of a sudden it goes also in the other direction where he has a chart. I can also show you the chart because I reproduce it, where he says that you have to look at liquidity. He has this idea that somehow the two match, liquidity and price match, if you shift it by 10 weeks. And I'm not sure about that. I'm not sure that, I did it myself. They kind of look the same, but if we had to take it literally, and I can show you, I have it somewhere. Let's see if I can find it. But yeah, right now, I think it will be a waste of time because in his understanding, if you take literally what he says, then it should be like a severe correction of the price of Bitcoin because actually liquidity, and you can see it, I already showed the liquidity actually is going down. But he's saying because they are delayed by 10 weeks, we didn't see yet that going down, but we kind of should see it now because the time with, it's more than 10 weeks when the liquidity started to go down. And what he says that basically we follow what liquidity does with this 10 weeks delay. So right now we should not just stall there, but actually go down and have a serious correction. So I'm not sure his understanding of liquidity and how liquidity relates to Bitcoin is correct. I respect him, but I'm not sure is just using liquidity as the way to explain everything up into Bitcoin is the key. It's one of the components. It's not the main component. Maybe during bulls, it's an important component, but it's not the entire picture. It's much more complicated. Keaton says this. We have 10 months to reach the cycle peak. We don't need to follow the period. Yeah, exactly. We don't have to be exactly correct, right? Like a carbon copy of what happened. But, it's still 10 months, like you say. And these 10 months at a certain point will be 9, and then 8. And then, if we don't see signs that we are really in a bullish territory, then it will be worrisome, right? But right now, it's one of these things. Say, well, okay, I'm expecting this. Like imagine you're expecting for springtime, right? And no plants is blooming or whatever, right? And then you say, well, maybe the season is a little bit late. We had a frosting or whatever. It's going to take a couple of weeks more. Okay, a couple of weeks is fine. 1 month is fine. Is 2 months, 3 months, 4 months fine? No, it's not fine, right? And so we are not there yet. But at the same time, you're right. So let's see what happens next. What are your thoughts on everyone say there is a head and shoulder and we are going to 77? I don't trust these TA ideas like a head and shoulder. It's astrology when people really try to find. People have studied this thing scientifically, like say, okay, let's take all the head and shoulders and see if it does what it's supposed to do. And when people did that kind of stuff, they found out that all these TA analyses are no better than charts. So I don't use them in my understanding of things. I don't use technical analysis. I'm trying to use what the scientists would use, right? Averages and trends and, periodicity of cycles and things like that. This is what the scientists will focus versus these non-scientific approaches. Like we talk about the support line because there is a real support physical line that you can see with your own eyes that has a real physical meaning. That is the closest thing that we come to doing TA. But everything else, in my opinion, it's astrology. So I don't know. The only thing that is coherent with this idea that, right, we go to, maybe there is a strong correction is mostly the fact that if people are expecting a bull market and the bull market doesn't happen, and I mentioned as one of the possible scenarios, when people will, kind of lose excitement, maybe they sell their positions. From what I understand, there are a lot of new investors that came in after Trump won. Maybe these people will get impatient and sell. We will have to see. Okay, I don't know what this click drag comment is. Maybe you can clarify. Let's look at this. So by looking at the power law line, we can expect the price will rarely hover very close to it, since when it crosses the regime change, stay mostly right. In the bimodal model, we don't stay much on the middle power law. It's basically two regimes. We are below the power law, and then we kind of cluster kind of in the middle between the support line and the middle power law. And then we change very quickly regime, and we go to the other regime where we do something similar, and we cluster kind of in the middle, and we have deviations that are mostly explained by additional volatility. So the bubbles themselves are created by this additional volatility. And these are the way that Bitcoin has behaved in all these years. And then we say, well, then what this red curve represents, why we have this red curve, is it meaningful at all? Yes, because it's expressing kind of a compromise between the two regimes, right? So there are different ways of going down the rabbit hole. There is a general trend that is this line that represents a compromise between the bubbles and the bottom. Then you realize there is this bottom support line. We don't have an equivalent of a ceiling line because the bubble decay over time. But you can still divide this, the data in two regimes. So that is the next step in your hierarchy of understanding, right? And I think it's a very relevant way of thinking about Bitcoin if we continue to do that, right? If we continue to have bubbles. But now that is the big question. Looks like we still get downside with less expectation for upside. This will have a negative impact on adoption. The people that want to get rid of the bubbles, like we have some people that have question if we will continue. First of all, okay, whatever happens, right? That is the reality of the situation. But in general, bubbles have played actually a positive role, even if you have these strong corrections. And because they create excitement, they create anticipation. It's part of human nature. People like exciting things, and during bubbles, there is a lot of FOMO as part of it. I'm a little irritated when people bring the FOMO to an extreme. Because I was one of the people who say we go all the way to 200,000, but to me is bullish, right? Because it's much higher than where we should be. By almost 80%. That is the calculation. We go 80% above the power law. But, it's something that people are interested in and get excited and bring adoption, new people, media attention. If Bitcoin continues along the power law, it's still incredible and fantastic. But you get some of the excitement going away, right? And that could be negative, in terms of at least temporarily, when maybe the market will still adjust it. And I don't know how the market will react if we simply follow the power law, right? And maybe we do have a correction when we go back to the power law. We will have to see. It's all uncharted territory. Now, in general, diminishing returns is not a fatal flaw, right? Because the power law is diminishing returns, right? Because people confuse these all the time. There are diminishing returns of the peaks and diminishing returns of the average trend. If you look at this chart, you can see that it's like an intrinsic quality of Bitcoin to have these diminishing returns. See, the blue line is what to expect in terms of returns, and it doesn't have to do only with the peak. It's the entire behavior of Bitcoin. You see how the real returns kind of oscillate around the blue line, right? And there is nothing wrong with it. Why? Because it's telling us that Bitcoin was doing incredibly well in the beginning to a point where it was unsustainable, and it was probably needed because Bitcoin, to get the attention, to get the resources, to get people even considering it at all, needed to do that kind of growth, needed to go up 2 times a year or something like that. But it was unsustainable in the long term. In fact, many people were scared about that growth, right? In particular, institution. So Bitcoin over time continued to grow, and at the same time, that is the entire lesson of the power law. It did it in a scaling way. It did it where the growth of a price in terms of scale, so orders of magnitude, 10, 100, 1,000, was proportional to the time. So it took longer and longer time, right? It took more and more time because we're talking about scaling, right? So we got one order of magnitude. When, to go up a factor of 10, maybe took in the beginning only weeks, then it took months, then it took years, and now we're talking about decades, right? Every time we go higher, not just in price, but also in the time that it takes to grow. You understand? So this scaling behavior. It's not a weakness of Bitcoin. It's strength. The question is, how the bubbles play, because the bubble have been these 4-year interval episodes where, in addition to these very, very predictable growth, there were also very exciting times where the price went even faster than that. Now, it did correct, and people many times forget about that, or it's part of a lore, we went to this high and then we crash, etc. Right? It's actually almost like some people even like that aspect, maybe, right? Or it produces news, and then, because in fact, when there is despair, we are right to that point where everything seems to be lost, and then actually Bitcoin recovers, right? It's almost like a story that we are telling over and over again, right? And some people like that aspect of Bitcoin being exciting in this way. If that aspect is missing, in one end, it could be actually pretty good, in particular for institutional investors. They don't like much this craziness, right? It's one of the things that kept institutional investors away. It could be something that actually institutional investors like, but maybe at least some of the people that invested in Bitcoin so far, maybe will be another way of investing, right? Where now you have this very, very predictable, even, I will not call it boring, but for some people will be boring, right? So I will not call it a flow. It's not, actually, it's a good thing that we follow a predictable pattern. I like the bubbles. I do. It was like a fun component of being a Bitcoiner. And also my position, right? It's something that in theory you could have used, because if they do repeat, and like I said, we are not yet in a place where we can exclude the bubbles continue. But if they continue and they have a peak at the same place, etc., then you can, you have this additional information, and you can use that information, right? You can sell the top and rebuy the bottom. I never advise to sell everything, maybe just a portion, or maybe take some other measures like buying puts, for micro strategies. There are a lot of things that you can do if this cycle continue, right? It's additional volatility that in theory you can use if you know what you're doing. So I will miss that component if we don't have bubbles anymore. And it will be different from what we had in the past. And people are mentioning how everything is different, but this time is different in a way that is not what most people think, like very crazy bullish behavior, and then we continue to have that crazy bullish behavior. If anything, everything seems much more muted. But let's see what happens. We need more information. Okay. Yeah. So I think this covered most of the questions. Let's wait another week. Let's meet next week and check how everything looks like. It's nothing too problematic, because let's hope we continue at least on the power law. That will give us about 140, let's say close to 140 by next year. That is still an incredible gain, right? About 40% gain relatively to where we are right now. That any other type of asset will be considered amazing, but Bitcoiners sometimes are a little bit too spoiled. We want 3, 4, 5 times. But let's see what happens. I'm trying to be as honest and as direct as I can without pushing the FOMO. So yeah, we need more data. We need to have more information at this particular point. Okay, guys. This time we actually kept it around 1 hour. That is good. So I will see you next week. Thank you. Bye, everybody.